So, is it finally time to sell this piece of garbage? I think especially when the entire market is experiencing some sort of turbulence or even volatility, all the more you will start questioning your initial decision and whether you have made the right choice or not. So I would just make a very bold speculation right here, right now, that most of the viewers, for long-time supporters of this channel, probably have an average price of around $150 to $200 currently back holding Alibaba. So you might have entered earlier and was averaging down all the way until today, or you probably have only started buying when it was in this range. So just a rough estimation, you are most probably down between 20 to 40% give or take. So do feel free to leave in the comment section down below what your average price is so that we can all nurse our wounds together. Jokes aside, I think the main focus of this video is to provide you with some perspectives and maybe just a very simple framework that you can follow and evaluate whether you should trim your position or even cut out Alibaba totally from your portfolio. Or you can diamond hands through the pain. You know what else is painful? You not smashing the like button, of course. So what are you waiting for? I'm waiting for you to smash the like button. Also, Moomoo is running a Christmas activity until the 31st of December 2021. So where you get a free Apple share and $40 of cash coupon when you make your first deposit amounting to around 2,700 Sing dollars or equivalent. So you can also stand a chance to win an iPhone 13, an AirPods 3 and many more during the limited time rewards promotion. So you can use my referral link down below in the description and you will also get 180 days of unlimited commission-free trades and real-time market data. So to start off, let me postulate why this question even come into any investor's mind in the first place. So I think the most obvious answer anyone can think of is this concept of opportunity cost. So this idea of opportunity cost has been plaguing many people, and many people have been extremely agitated and also tempted by the rest of the markets when they see other companies such as Tesla and Apple going to the moon while they are essentially losing their capital here. So it's essentially a double whammy as well, because you not only lose your initial capital, so based on the previous assumption that we have created, you are probably down between the range of 20 to 40%. You also lose the potential appreciation you could have enjoyed if you essentially bought the winning companies instead. So we do have to get a caveat out of the way. First, the discussion here are purely theoretical and it's of course done in hindsight. So sure, the money you threw into Alibaba could have very well went into companies like Tesla or even Apple, but it could also have went into other trash companies that probably didn't do so well, at least in the last 6 months or so, depending on your state of mind then. So we are technically working with a very flawed assumption, but let's go ahead with it first.
But it would be a reasonable assumption, right?
Why? Can I make an equally reasonable assumption?
No.
Now, you're stuck at the crossroad. You are debating whether you should realize your loss and move on with life and really just scold Alibaba and scold Chairman C alongside. So I think we have a few questions we have to ask ourselves beforehand before you make any form of decision. So first and foremost, I think the most intuitive question would be, what are you going to do with the cash if you were to really sell out today or when the market opens? Holding it in cash? Or maybe even buying another security, or using it for even your own living expenses or buying a house, etc. So if it's for your own short-term needs like living expenses, I don't think it should have even entered your brokerage account in the first place. So I think you can safely assume that the two most common decisions is probably either to hoard cash or to rotate it to another company. So I understand why people would like to hoard cash, especially when today's market environment is so volatile. You might want to buy the dip on certain companies that you love, or you might just want to prepare your war chest and to build up your cash position. So all those are legitimate reasons, by the way. That said, however, it does seem like you are trying to time the market and do some sort of portfolio rebalancing. So all in all, if you know what you are doing exactly, then kudos to you. I don't think this video is for you anyway, because you probably have some rebalancing strategy. However, if it's for the latter, if you want to sell Alibaba in order to buy another company, let's take Apple for example. You first have to be bloody sure that the risk-reward ratio you are seeking before you do the change. And also, don't forget that the different valuations of the respective companies that you are comparing to. I'm not talking about Apple specifically, but just any companies by and large. So just based on how probable the different prices would be in the event of a black swan. So Apple is probably currently trading at around above $170. So does it have a chance to go down by 50%? Probably back to $85. The last time that it was at 85 was around June of 2020, after the pandemic scare. So I'm assuming that this is some market-wide crash based on some black swan event. So now, can Alibaba crash another 50% from here? Yeah, sure, why not? Never say never, especially in the stock market. But another 50% from here would mean that Alibaba is trading at $60. So you do your own judgment for your own investment portfolio. So I know, people immediately shoot back. You don't understand, dummy. Apple can break above $200 easily, while this piece of garbage just keeps on dropping. So if you sincerely thought so, I would also sincerely implore you to immediately rotate your money, because I'm not here to convince you otherwise. And it's ultimately your own portfolio, so you be accountable to your own money. But I'm just trying to provide you some perspective. So the worst case scenario would be when you already lost, let's say, around 30% from Alibaba, and then it goes down another 30% in this new holding, and you will ultimately be down 51%. And this also nicely segues into point number 2, which is where they are no longer comfortable holding on to Alibaba or any Chinese stocks of that sort. So for that group, I believe there is no other way out other than trimming your position until you are comfortable, or just completely exiting out your position. So there is essentially no point to lose your sleep and lose your life when the whole point of investing is to achieve financial freedom and be happy with life. And in this instance, your quality of life is probably severely impacted. So if you're just outright uncomfortable, I think you know where the door is. It's located at the sell button. So anyhow, I would just like to jog your memory a little when you first hit the buy button some time back. So I'm sure most of you probably have done a decent amount or decent level of due diligence and know of the different risks such as delisting, VIE, Chinese government, etc. So I would just ask you, what exactly has changed from the start of the buy button until today? Or were your initial analysis not inclusive of those risks involved? So I'd also like to emphasize on the emotional aspect that is probably affecting your judgment today, if any. So there was also a very common discussion surrounding how they did not expect that CCP is so scary or the Chinese government being so blatant in their approach. So my only reply to that would be lol. Same suggestion, go back to your underlying bull thesis, re-evaluate them again and see if it's something you should be excited of or be running away from. So now, the third narrative would be that some people might feel that the fundamentals of the company has ultimately changed. So the increased competition, the challenging macro environment in China today, the change in government stance, the uncertainty in taxation and donation. So essentially, the laundry list goes on. So to that, I think the best thing you can do now is to go back to your model, regardless of what kind of model you use, whether it's discounted cash flow or even sum of the parts valuation, and be as aggressive as you want to in terms of your projection. So by saying aggressive, I mean by being extremely pessimistic. So if you still come back with a relatively bad projection and has completely lose faith in the company, then I think you should know what to do as well. But do take note of the different assumptions that you baked into your own model before you do the necessary adjustments or even the necessary actions. So another discussion that I came across recently, actually in my comment section down below, include the idea that, hey, the Chinese government is a known unknown. So meaning that the investors are aware and are critically aware of this risk, but cannot make sense of what they are going to do next. And this unknown will remain a huge challenge in terms of the valuation and in terms of how Alibaba would recover in the near to medium term. So I get where this argument is coming from, and the explanation was coupled with the statement that, hey, a huge margin of safety is usually useful only for unknown unknowns. So I think I only have 2 points to make with regards to this explanation. Number one, the Chinese government being a known unknown is highly subjective. You have many analysts, personalities, and even the Chinese government themselves trying to put out and put forth their narrative and to explain to you their train of thought. If you don't wish to listen and internalize and try to understand from their point of view, you can't really blame them for that, am I right? Next, in terms of valuation, let's not forget that Alibaba is currently trading near one third of its all-time highs. So what happened to the known unknowns? What happened to the fear of the Chinese government? You mean in the last 12 to 18 months, the market suddenly had new revelations, something that they didn't know of? I'm quite sure that all these different risks and concerns have been rinsed and repeated for God knows how long. So is this really the first time the capital markets are interacting with the fear of the Chinese way of doing things? I highly doubt so. So you be your own judge. On point number 2, margin of safety is essentially an investment philosophy. Known unknowns, unknown unknowns. It just provides you with a bigger bandwidth and a bigger propensity for you to make mistakes and probably not lose that much money. I don't really think you have the ability to draw such a fine line to be so accurate in terms of your projection. So I would also like to remind all investors out there, at least for people who follow my channel, don't be too confident of anything in the world, especially in the stock market. Usually when it's too easy, it might just be the calm before the storm. In the first minute, you thought that it was a known known. In the next minute, it might suddenly become a known unknown. Especially when the world is innovating at such a fast pace, pricing for perfection is probably an extremely scary thing to do. And it's just my 2 cents, of course, don't get too triggered. Enough with the knowns and unknowns. Side note, I know that I haven't been extremely active in my comment section recently, but do know that I will still be reading the comments from time to time to gather some sort of inspiration or even just to gather some ground sentiments. However, it might get a little bit too toxic at times, and I don't want to model after the CCP to start deleting comments and really try to shape the narrative that I want to. That said, I'll be revisiting the comment section soon and reply to probably most of the comments to the best of my abilities. And do it in one sitting, of course, so that you guys can flame me all you want. At least it's one shot and not really a prolonged pain. So with that, remember to leave in the comment section down below what will you be doing with your Alibaba stock. I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!